Hello guys, welcome back to my channel. This is Data Geek Trading. Today we are gonna talk about how do we catch the temporary top of a particular stock, especially in the future segment, and how can we benefit from a stock while it's making its market structure. So first let's try to understand how does a stock create a market structure. So it goes like this, then it comes down for a bit, then it again creates a new high, then it goes down, then it again creates a new high, and so on and so forth. It consolidates for a bit probably sometimes, and then again it creates a new high. Now we all know that when the stock is moving creating these kind of a situation, we can buy during new highs by keeping the lower swing as the stop loss, and then we can probably try a 1:2, or we can keep trailing at every swing low. So that completely depends on your risk management and your money management. What I'm trying to tell you here is that there's an opportunity to even try this. Now, although the journey of a stock while it's doing its downturn in an uptrend is short-lived, but yes, the profits which we get here are very fast. Probably within 3 to 4 days at max, we can at the minimum try to get a 1:1.5 or a 1:2. Now, how this generally happens in finance, there's a concept of mean reversion. So if you could see my screen, I'm not here to bore you with some finance lecture. We'll just go through the definition together, and then we'll get straight to the point on how can we build this strategy to trade on futures shorts, mainly on short selling while a stock is in its uptrend. So mean reversion, or reversion to the mean, is theory used in finance that suggests that the asset price volatility and historical returns eventually will return to the long run mean or average level of that entire data set. Basically what it's trying to say is that when a stock has run up by a lot, it definitely tends to come to its short-term moving average or long-term moving average, and that goes up again. So now let me just remove all these drawings, and let me just switch on the chart for DLF. What we would put in here is just the 5-day moving average of any stock, and we would see that whenever a stock is trending above its 5 moving average without even touching, and visibly and evidently a bit above, especially in this candle for example and the recent candle, it definitely tends to come back to its 5 EMA, right? Just like if you are doing a huge marathon race, or you're doing, let's say, a 100-meter sprint, after the sprint ends you would try to rest for a bit. So now the trade opportunity here is that whenever you see a daily candle closing above 5-day moving average in a stretched way, you need to take a short position as soon as the candle crosses that day's low. So for example, we take a short entry here, and you keep that day's high as your stop loss, and then you should at least try to do a 1:2, and then you can trail. If suddenly, let's say, the stock resumes on a downtrend, then you can generate a lot of profits, but at the minimum you should try to do a 1:2. So for example, if you observe this candle, let me try to zoom in and show you. This particular candle, it closed above its 5-day moving average, and then obviously by the mean reversion theory it needs to come down to its 5-day moving average, and then that particular event gives you your trade opportunity. So for example, currently also recently it happened here in DLF when it stretched above its 5-day moving average, and then it returned back. However, since this candle was very big, so our risk to reward won't be favorable, right? Hence we would avoid such trades. Now again I see an opportunity here in DLF wherein your daily candle has closed way above the 5-day moving average, and with a smaller candle, this is the candles which we should prefer, because here your risk to reward is very, very favorable. So for example, if we take a short position, if the price tried to correct towards its 5-day moving average, we just have a 5 rupees stop loss, and then we get a risk to reward of 1:2 is here. Perfect. So since it's going to be a positional trade, obviously we should prefer the the futures trade here. Now let's go and backtest any other random stock, right? Let me just open the watch list, and we'll choose any random stock, and then we'll see if this theory gets applied there or not. Let's say let's take for example Hindalco. Let's go back in history and check if Hindalco has given us such mean reversion opportunities or not. So we again open the chart with a 5-day moving average as shown here, and then we go and see. So here you see I've already put an alert candle here, because it has closed above the 5-day moving average, and it will tend to come back and then resume its uptrend. So we are not betting against the market, guys. Please don't think that we are going against the trend. We are actually playing along with the stock while it is making a healthy market structure, which is higher highs and higher lows, and we are taking the trade when the stock is creating the higher low from the recent swing high. Now you could have gotten a trade here also, right? Just check, and you could have easily gotten a 1:2. Then there was another trade which was here, and then look at the fall you could have easily generated. Imagine you could have also caught the top of Hindalco. Imagine, see this short position. Look at this candle. You could have entered here, with this candle high as stop loss of 14 rupees, and you could have booked your 50% at, let's say if you're playing with two lots of Hindalco, you could have booked 50% at 1:2, and then you could have trailed. There are 100 ways of different trailing mechanism, and look at the downfalls. This was like when you were lucky enough, you could get these kind of moves as well. So our job is to keep trying. Here if you would have taken a mean reversion theory, you would have been stopped out, and that's completely okay. Everyone needs to get stopped out at some point or the other. Here again there was a good 1:2 trade when the stock fell down. So likewise you need to hunt for stocks who have moved way in the recent way above in the recent few days, and then you should check if these stocks have created, let's say, their day closes way above the 5-day moving average, and you could definitely try to trade those stocks on the short futures segment. For example, NMDC September's futures, this is a wonderful opportunity, right? It has moved way above the daily moving average. Don't you think that after this breakout it would again try to come to at least retest this near around this levels, and then go up once again? Obviously, right? So you can definitely try to take a futures trade on the short sell side once it starts going below 123, with this mean reversion theory that the stock would tend to come towards its 5-day moving average. Let's try to see one more stock so that you guys are confident that this really works, and then we could wrap up this video. Let's check CUB, the City Union Bank. On the recent day we have a good opportunity. Look, all these stocks are already on my alerts, because I generally trade this strategy a lot whenever it closes above its 5-day moving average. Look, I'll take a short trade here with around 10 to 11 rupees. Obviously it won't be exact 1:2, it could be 1.8 or 1.7, and I would observe the price action on how this is behaving. Now let's see here. This was like a great opportunity in City Union Bank. Look at this candle. These are the kind of candles which you should be definitely hunting for. If you take a trade at the break of this low candle, your stop loss is just 1.75 rupees, and if you could have held on to the trade, it was like a 1:12, 1:10. So it all depends, right? I generally like trading more. I have this urge of trading more, hence I generally get out at 1:2. And likewise, you can go in the history of any chart, whether it's Reliance, HDFC, look at all of this. This was trading above the 5-day moving average. It tended to come back here. Now you could also apply a similar thing if the stock is closing way below the 5-day moving average and it tends to cross this. You could definitely take a trade there as well. However, whenever a stock is in a downtrend, the expectation of it coming back to an uptrend needs certain macro and fundamental aspects as well, the broader indices as well. So hence I definitely avoid taking long trades using mean reversion. But one thing is for sure, right? If a stock is overstretched, it will definitely try to come back to its mean, and there's where we take a trade. I hope this simple yet beautiful mean reversion strategy would be helpful to you guys. Try to take certain short positions on the intraday futures and let me know how it goes. Obviously play with very small lots and very small stop losses, so that you don't lose a lot of money. But my idea was just to give you an education on how can we use certain financial theories in the stock markets as well. I hope you enjoyed this video. Do like and subscribe my channel if you want many more educational videos like this, and also please try to follow me on Twitter, where I share a lot of data backed trading strategies, and the Twitter link is on the description box in this video below. I hope you have a great weekend. Enjoy.